Intersection Magazine Podcast.
So this is one of those conversations I'm really excited about sharing with you or having. I'm about to introduce a group that I've been working with for a while now. It's the brainchild of Kenneth, Twesigye. I use Kenneth's facilities for the internet quite a lot. They have affordable internet. I've also made use of their conference room. Their daily rates are great as well as their monthly rates. I think I've used their facilities for about 2 months, not following on each other, but spaced apart. So they have a project called Startup Funding Vehicles. Kenneth himself has, he's the owner, or he founded Tech Buzz Hub. The last maybe 8-9 years he's been working in the space and starting conversations, helping young people, mentoring young people, of course doing quite a lot of work in terms of setting up a physical space where people can work. Now he's put together a forum, started a conversation, having been part of the group that was working on policy documents for the Startup Act. So now he has what he's called Startup Funding Vehicles. You can get membership through different tiers of Startup Funding Vehicles, where they're trying to create a more effective ecosystem around the funding of startups. So this conversation is part of a series that they're doing where they're trying to educate those who want to get into the startup space. And this conversation is actually hosted or hosts Kenneth Legesi. Kenneth himself has been in the ecosystem for a while, mainly on the finance side. And I like the way he structures this. So what I'll do is I'll introduce how the conversation is going to go, and then I'll just let you listen to Kenneth's presentation. He first of all splits it into about 5 parts. He makes the case for scalable startups in Africa. Then he talks about smart capital and what that looks like. He talks about what it means to be a high-impact startup investor. He makes some suggestions in terms of how to position yourself as an investor and to be effective, which include collaboration, syndication, and scale. And then he makes some suggestions for what the future looks like. Interestingly, he talks about how we're not really, although the conversation around unicorns is attractive in the sense that experts say it's much cheaper to set up or to create a unicorn in Africa than it is on any other continent. Kenneth Legesi makes the case that what can end up being even more profitable than setting up unicorns and being attractive is the exits, and how sometimes those exits, especially when other companies buy out your company or your startup, can prove to be more effective and more profitable for those who are part of the company, because those exits have actually produced more people pivoting from the creator or from the entrepreneurial space into the VC space. So while the subject of unicorns can be attractive, what sometimes is even better is the exits, where the people that were part of the ecosystem as founders end up pivoting into the investment space, which is which means more profit or more investment into startups as a whole. So that's pretty much what he covers. And that's the subject of this podcast. Once again, startup funding vehicles, Tech Buzz Hub. Those are conversations that they've been having. And so the next few episodes will be recordings and, of course, summaries from myself about what you're about to hear. And hopefully you will be able to engage as well as connect with these people through their LinkedIn and other channels that they share. Once again, thank you for listening. I'm your host, Nicholas Kianda, for Intersection Magazine podcast. So next you'll be listening to Kenneth Legesi as he makes the case for funding in Africa.
So yeah, good evening, everyone. I hope you can hear me.
Yes, we can hear.
So yeah, great that you're doing this, Kenneth. I am also Kenneth. And when did we first meet, Kenneth? Was it like how many years ago?
It is around 2018, I think.
2018 now. Yeah.
Yes, around 7-8 years.
So Kenneth has been at this a very long time, and I just want to applaud him for all the work he does for our ecosystem. And as Kenneth, I'm also going to just share a bit about the lessons I've learned from trying to build an investor ecosystem. So just as a guide to what I'll be sharing about, I've just prepared a very brief presentation, and I'd rather we get into a discussion really quickly, as opposed to spending time talking about things, and just share practical experience as much as possible where I can. So about me. So Kenneth Legesi, I am an investment professional, been at this about 20 years plus. Although strictly speaking, finance and investing, I've been doing that maybe for the past 15 years. And what I do on a day-to-day basis mostly is advisory, helping people who are looking to invest money on the continent. But 10 years ago, I just returned to Uganda from the UK, where I'd been for most of my professional life. And I got interested in the startup ecosystem. And that's when I got to meet people like Kenneth and some of the other ecosystem builders like the Innovation Village, Design Hub, Outbox, and then Hive Collab. And I spent time at these spaces. In addition to spending time at these spaces, I met some interesting founders whom I helped to build businesses by being part of their co-founding team. Some of those companies include, the very first one was Sente, which is still going. I'm chairman of the board at that one. Then there was Digest Africa, which I haven't given up on, especially now that AI is here. It's a data analytics business. There was there's others I've since been involved in following that time. But the thing I quickly noticed is I used to do a lot of mentorship sessions and helping youth entrepreneurs, but I noticed that in our ecosystem, there were no local angels and local investors. And what I also noticed was that it was a neglected ecosystem. And so we needed very quickly to build local capital that will believe in these founders. But secondly, that will then introduce these founders to the follow-on capital that you need. So in the process, I remember with my friend CK at the Innovation Village, we started Kampala Angel Investment Network. to sort of build that angel investment network. The journey usually for an entrepreneur is that they build a business, they grow it, they sell the business via what is called an exit, and then from that exit, they have money to then come and invest. Usually they come and invest by setting up a VC fund. But for most of us entrepreneurs and founders at the time, or ecosystem builders at the time, we didn't have any exits in the market. We now have some to talk about, but that money hadn't yet come back into the ecosystem. So you needed to sort of create a vehicle that will help investors at the entrepreneurs at the early stage get that pre-seed angel capital. So besides Kane, we then set up the 97 fund. We had a very brief stint deploying money, about $1 million to about 10 businesses, mostly non-dilutive capital together with mentorship to 10 businesses. But we failed to raise funding into the 97 fund to be a proper venture or VC fund. But the legal entity still exists. For Kane, we also ran some deal days where we found entrepreneurs and we would match them to local angels. And most times what would happen is the amount of funding the local angels wanted to invest and the amount of money the entrepreneurs wanted, there was a bit of a mismatch. The valuation that local angels wanted to invest at, the valuation the entrepreneurs expected, there was a bit of a mismatch. And as well, some of the local angels were not aligned in terms of the type of risk you expected from early stage businesses. Most of them were behaving more like local lenders and money lenders, comparing venture capital to asset classes such as debt or real estate or unit trust. So you could see that mismatch. So subsequently, I noticed there is a gap around just educating investors and finding entrepreneurs and making sure they are matched to the needs of these investors. Why am I telling this story? I'm telling this story just to show you the experience and lessons I've had in our local ecosystem around trying to build an investor network or ecosystem. So I then founded Ortus Africa Capital. We are an investments and advisory firm. And at Ortus Africa Capital, I've had the experience then to help institutional local capital vehicles get formed. Internally, we created our own local capital vehicles, one on the lending or private debt side, focused on giving you money for working capital. Because we saw a lot of the entrepreneurs, they don't have the funding to help them scale by generating revenue very quickly. So they're attractive and high growth for VC. But we also built out a venture vehicle whose model was around venture building. And that one is giving some money, yes, but mostly providing linkages to follow-on capital. And we also learned that for our market, the focus should be, as our thesis, as Ortus Africa Capital, the focus should be around B2B businesses. So that is really my background and my lessons that I bring to building an ecosystem, an investor ecosystem. And so now I'll just maybe go into just how I'm going to start what I'm going to talk about. And this is just showing some of the work we've done in the process. So as I mentioned, the 97 fund, or what we did there was structuring and setting up the fund itself, then management and deploying of the fund. I told you we do venture building. Some of the companies we worked for included the Postman app. I told you we set up advisory for a locally domiciled early stage fund. You may know of it. It's called Inua Capital. And actually, Kenneth, I don't know if Kim is acceptable, but it would be good to get her on SFV just for her to share a lot of our insights and knowledge. But in the period, we've been spending most of our time at Ortus Africa Capital just working with preparing local businesses for raising capital or for getting investor capital, and also preparing local investors to deploy money to early stage startups. So I'll now go into what I was hoping to share today. My thoughts on what I see as apologies. Just what I see as a roadmap for what I'll talk about today. If you're going to be part of our investor ecosystem in Uganda or indeed in Africa. Number one is appreciating that there's a case for scalable startups in Africa. Kenneth gave us some of the statistics, but suffice to say that of course, Africa is going to be home to over 1 billion youth by 2050, according to UN statistics. And as a result, it's encouraging innovation and startups and are being built. These startups are creating over 3 million jobs in Africa. That's the statistics by Disrupt Africa. And yet, more than 80% of these startups die or fail within their first 3 years. So early stage capital still remains under 10% of funding in most of African markets, but more shockingly, less than 1% of global venture funding comes to Africa. So this is the case really for building scalable startups in Africa and for bringing smart capital to work in Africa. But what does smart capital look like? And what have my lessons taught me? So smart capital is really not just about money. And from the background I gave, you can see that smart capital is about founders needing mentorship, founders needing access to networks, founders needing revenue or customers so that they can grow. Because when you define what a startup is, a startup, the technical definition people say is a business in search of a business in search of a repeatable business model. But more importantly, though, it is a fast-growing business that is solving a problem for which there is a large addressable market. And for the startup to unlock the value in that addressable market, it must be able to reach those customers and get them to buy. So smart capital to a startup, and as you think about becoming an investor in startups, you must be able to bring customer access to your startups. And for some of the companies we worked with, for example, at the 97 Fund or even at Ortus Africa Capital now, there were some that were growing revenue. One of them I knew grew revenue 12x in a single year. This company was in the healthcare sector. Of course, there might have been implications from COVID, but still, it was impressive growth. Yeah. So we were helping them with that growth by being able to bring them access to and positioning them for that opportunity at that time in their growth journey. So introductions to potential buyers of their product, making sure they are compliant from a regulatory point of view so that they stay in operations and service those clients, giving them working capital needs around consumables. So that kind of capital enabled them to be able to grow. What this means is that as an investor, you must be ready to engage beyond the paycheck that you're giving the entrepreneurs. Right now, for example, I'm mentoring or helping a business that is looking to build packaging solutions for Africa, starting with Uganda as a pilot. But because I was already funding a similar business on a profit share basis, that gives me the knowledge to be able to bring these insights to that business. So we need smart, if you're going to build yourself out as an investor and in this ecosystem, smart capital becomes important. But how then do you transform yourself into what I'd call a high impact startup investor? There are certain toolkits that you need to have. One is learning the instruments that startups get funded with. So whether it's straight equity and understanding that you'll probably be investing in ordinary shares, especially if you're investing earlier on, before a startup goes to, say, a Series A, Series B, and so on. Understanding instruments like simplified agreements for future equity, understanding instruments like convertible loans and convertible notes, and knowing the relevant clauses to negotiate with entrepreneurs. But secondly, understanding then key metrics, things like customer acquisition costs, lifetime value, monthly recurring revenue, annual recurring revenue, runway. More importantly now, time to break even for a startup. Because increasingly what we're seeing is that revenue is important, especially if funding is going to dry up from your investors. So as someone who wants to be an investor in startups and be able to be useful to them, it's important that you understand these key metrics. And relatedly then is startups and entrepreneurs, when they need capital, they will need it quickly, and they would want to know what your process is to give them that capital. And that means creating a standard, what we call a pipeline and due diligence flow. So, and that will bring me on to the next point. But you need to know, okay, if I'm going to be investing in startups, where do I source my pipeline? What do I want to check before I invest? How do I connect to that market of where the startups are, monitor progress and find such investors? That means you then need to be collaborating. You must be ready to syndicate and share deals, and you must be ready to link these entrepreneurs and startups to follow on funding. So that's point number 4, collaborate, syndicate, and scale. I mentioned earlier that less than 1% of global venture funding comes to Africa. More shockingly though, when venture funding happens in Africa, most of it is from capital from outward. So what people would call foreign direct investment. So we don't have domestic direct investment. There's a statistic that only 7% of early stage deals in Africa are syndicated locally. Yeah, so that's based on data from the startup deals that are being tracked across by the different providers out there. So it means investor networks like the one we are building at Kane, or like ABAN, Africa Business Angel Networks, or NIBAN, Nairobi Business Angel Networks, or Launch Africa Ventures, who run a network of pre-seed investors, or Hawk, who run a network of diaspora African investors. It's important that these investor networks you can become part of if you're going to be investing, because they help you, 1, source and see deals, 2, reduce risk, and 3, increase the quality or deal access you'll have as an investor. And by syndicating or collaborating, you're able to then pool capital so that you're able to fund larger ticket sizes and at the same time reduce your own exposure as an investor. At Ortus Africa Capital, with our private credit vehicles, we've been able to catalyze some syndications, which have enabled us then to be able to do larger tickets for businesses that we otherwise wouldn't have been done. But it then means having an understanding of, say, the syndication agreements, the way rights for each of the investors works in the syndicate, the way you do joint monitoring of the investee or the entrepreneur you're giving money. It lightens the load, it reduces the amount you invest, it reduces your risk per investment item. And the last point on this really would be that by sharing and syndicating on deals, we will all learn together, and then we grow the ecosystem sustainably by not being broken as just one investor. So to then close, looking ahead, what do I see, and what are my thoughts on where this is going to go based on these 10 or so years of building this investor ecosystem? So I'm optimistic that by perhaps in the next 5 years or so, we'll continue to see growth in the frontier markets, i.e. markets such as Africa. We'll continue to see more positive stories. There was an article recently on LinkedIn by, I believe it was Ian. Ian is one of the big ecosystem builders for Africa, an investor, a founder. He's more famous for having founded Flutterwave and Andela, but he since built Future Africa. But I think he was reposting an article that was saying it costs less per dollar for creating unicorns in Africa than in other parts of the world. So I'm hoping in the next 5 years that we'll suddenly see more unicorns coming out of Africa. But I'm not so wedded to the whole getting unicorns. I'm more driven and more optimistic about the impact that will have on our investor ecosystems. Because, for example, the Paystack startup, when it exited to Stripe and paid out a lot of the founding team and the employees in the startup, in the company, it created angel investors that have then boosted the ecosystem in Nigeria. So I'm more excited that if we have global startups as Africans, that from the exits will create more local investors. But that won't happen if as African investors we are not supporting these startups. It means we switch a bit our mindset. So we must lead with our own capital, whether it's in the continent, in the diaspora, through angel networks, or institutional capital. I know some of the licensed fund managers in Uganda are now mooting what we call alternative investment vehicles, because venture capital, private equity, investing in startup is thought of as what is called an alternative investment asset class. But that can be a talk for another day. So my hope and certainly expectation is that we'll have institutional investors coming to this asset class. NSSF started by investing in the Yield Fund, which was an agribusiness private equity fund. I know because I was part of the team that structured that and got them on board, but I'm hoping they can come even further up the risk curve by investing in venture capital. And when they do that, they can do it perhaps by anchoring or investing with some of our local angel networks, local angels, and extend what they were already doing now under their high innovator program, where they were giving money in exchange for rights to own equity. They could just underwrite venture capital as an ecosystem. So my urge then to you, investors who are listening on the call, as I close, is to then look at which networks could you join. Feel free to reach to join startup funding vehicles, Kane, reach out to me at Ortus Africa Capital, or educate yourself as individuals so that you can do these things, i.e. Make sure you become the smart capital, be available to collaborate and syndicate, behave like a high impact startup investor by knowing the instruments you need to use, understanding the key metrics of startups, and therefore being able to very quickly provide post-investment support as you move towards getting the outsized returns that are known to come from startups. And with those remarks, I thank you all for listening to me, and I'd be happy to take questions and have a discussion.
Intersection Magazine Podcast.